Welcome back to another episode of Red's Roundup. We're going to be going over some investment ideas I have. This is not investment advice. This is my list of investment ideas, and you're not going to miss what I have to say coming up. First on the list, we have a company called Reit, ticker symbol PW. And Reit is a specialized real estate investment trust that owns sustainable real estate related to infrastructure assets. So what does that mean? I'm going to pull up an investor presentation here quickly. They own, here's a list of their current assets, and they may have added a few more. Their railroad property, so they own a railroad. This is their railroad they've owned for many years. Solar land that they own and they net lease. And then controlled environment agriculture, which is essentially greenhouse. And these greenhouses are being used to grow cannabis. You might think, cannabis, that's risky. These are the most safe cannabis investments because their returns are projectable. Their rent is going to increase at a standard pace, which is much larger than you'd expect, at a 12 to 18% range. And they get higher returns on their investment because there are so few companies investing in controlled environment agriculture or greenhouse for cannabis use. So let's take a look at their portfolio here. 55% of their rental income is coming from the greenhouses, whereas 24% from solar and 21% from railroad. Then if we look at the gross book value, we see that solar land makes up a bigger portion, as well as railroad, of their book value. This essentially means that they're getting a higher return on investment from their cannabis properties than their solar properties. So let's take a look at the financials of this company. So here we see Yahoo Finance, PW, ticker symbol PW. We have a PE ratio, which I don't like to use for REITs. A fund from operation is probably more reasonable, of 67. And I think that that's actually not that unreasonable because they are projected to triple their earnings over the next 2 years. And that's because they just took out a $15 million loan and they're investing in their agriculture. This is a micro cap stock. So any incremental investment, you're going to be able to return a lot more from. So this is the first idea, real estate investment trust. Get to know it, maybe learn a little bit about it. You tell me what you think. So next we're going to be looking at a company called ACMR Research. So they trade ticker symbol ACMR on the stock exchange, and they are a wafer cleaning company. What does that mean? So semiconductors that go in your computer, phone, laptop, whatever it is, they need to be cleaned and they need to be manufactured in a way that they're pure. So this company helps manufacture those wafers, and they develop products that are revolutionizing the manufacturing of these wafers. So let's take a look at one of their investor presentations. So what's their mission statement? To become the leading global provider of semiconductor capital equipment. So that means equipment for making semiconductors. Here's a list of their equipment we see here. They've got more than 285 patents issued in the US, China, Japan, Korea, Singapore, and Taiwan. So they are protecting their intellectual property, they are innovating, and their financials reflect that innovation as well. So their revenue from 2018 to 2019 grew at 44%. Their net income, 187%. So this is a growth stock. This is a growth stock. And we're going to see that in the financials here. It's got a market cap of 1.6 billion. So that is a small cap still, not a micro cap like before, but a small cap. Trades at a PE ratio of 94. And I think that's pretty reasonable when there are companies like Amazon or Tesla that are only increasing their earnings per share by 20% year over year, and ACMR is increasing theirs by over 100, and those companies are selling well above 100 times earnings, and ACMR is trading at less than 100. I feel comfortable with that. So moving on to some of their other financials, I want to show you something here that's important in their statistics. They are relatively debt-free. So if we look here, their total cash on their balance sheet is $52.28 million. Their total debt is $7.44 million. They could outpay their debt in no time. So they're at very low risk of going bankrupt, even if their current trends continued, which they're making money, they aren't going out of business. I think there's very little risk of that. There's very little risk of losing money in this stock, I think. You tell me what you think. You check it out. Not investment advice. The next stock we're going to be talking about is a stock called Equinox Gold, ticker EQX. They trade on the New York Stock Exchange and the Toronto Stock Exchange under the same ticker. So what is EQX? They are what they say a premier America's gold producer. So with gold shooting up to all-time highs, probably going over 2,000 relatively soon, which it actually has, but staying over 2,000, a lot of people are looking to get exposed to some of that gold commodity. What will Equinox Gold offer you? Let's look at their investor center. So let's look at a few of their quick stats. So they have 6 producing mines, all in the Americas. So if you're worried about the threat of China or the instability in Africa or Asia, wherever, they're in America. You're going to have relatively good safety in those mines. So that's going to be an upside there. 4 growth projects that aren't yet producing. 1 million ounces production target in Q3 2020. And it's got a really good insider ownership, and that leads me into the next point, which is 9% insider ownership is probably one of the highest among any junior gold miner, is this guy, Ross Beatty. He is one of the top mining investors in the world. And so he is the chairman of Equinox Gold. He's helped with companies like Pan American Silver, and he's got a storied background in the mining space, and he's the chairman, and here he is the major shareholder of the company, I think, as well. So you're really going to be in good hands with him. This is his final project. I've watched a number of these interviews, and he's looking to go out on top. So let's look at some of their financials. So another small cap, 2.8 billion, not bad. It's currently not making money year over year, but let's look at the chart. This chart generally follows the price of gold, although I think it trails it a little bit right now. If you calculate the price of gold, it maybe should be a little bit higher. So you tell me what you think about Equinox Gold. This is one of my thoughts, one of my possible investments in the gold space. So for the last pick here, we're looking at a company called FPI, Farmland Partners, traded on the New York Stock Exchange. So as of June 2nd, 2020, Farmland Partners owns 156,000 acres in 16 states of farmland. And so they're actually the largest internally managed REIT that manages farmland in the United States. So let's look at some of their properties in the United States. So they own everything from California to North Carolina. So their farmland is very diverse. They own different styles of crops. You can see here that they have different acreages and different places. So the Corn Belt is their largest region. And we see here that they've got a good geographic diversity. And you can see that here in their crop diversity as well. Specialty crops, so those are crops like almonds, avocados, walnuts, pecans, pistachios, wine grapes, tree fruits, etc. And row crops, corn, soybeans, rice, cotton. Those are the 2 main types of crops they own, and that gives you a relatively good amount of diversity. Many of these specialty crops are going to be in the areas like California, but that's past this video. Let's look at some of their financials. So right now they have a dividend of 2.81% right now. And they're actually in the process of raising that dividend. Let's look at their chart. So you might see like, oh, their price has been going down so much. That's actually a good sign, because let's look here. There's going to be something interesting for you. We're going to be looking at their book value. Their book value. So their book value is less than 1. So that means all of their assets minus all their liabilities are less than the price that the stock is trading at now. So let's say you bought all the company and liquidated everything. You would make the difference between the book value and the price that the stock is trading at right now. So that's a good thing. let's look at some other things. So their debt is high but manageable, and compared to the other farmland REIT, it is actually better. They're in the process of growing their revenue. That's good. And in one of my earlier videos, I've touched on the principle of inflation. Farmland is actually the best or one of the best inflation hedges out there. It's going to keep pace with inflation, if not exceed it. And in addition to that, you're going to be getting that dividend that's going to be recurring. So there's going to be the rent payments in the dividend and the capital appreciation in the form of the farmland. So give that one a shot. Tell me what you think. Thank you for watching my presentation on some investment ideas I have. These are not investment advice. Remember that. This is my list of investment ideas. Tell me what you think. Again, I don't really have an opinion on these companies either way. So let me know. I'm open to discussion. Thanks for watching. Leave a comment, subscribe. You know the deal.